I set up my trade to where if Bed Bath and Beyond goes up about 0.65%, then I'm gonna make $42 off of a max loss of $8. Okay, so this also allows me some profit if the stock moves up all the way to 3%, 3.38%, and it gives me some room if it goes down about 2%. So okay, so the first thing we want to do is we want to try and find a stock that doesn't have a lot of price movement. So it's been trading relatively flat the last year, and just a stock that we think is going to continue to trade flat for however long that we set the expiration to. Okay, so I'm taking a look at BBBY, Bed Bath and Beyond. This is actually a company that is considered one of the meme stocks that's talked on all about on Reddit. And so while it does have a lot of volatility, if you take a look at the last year, it's been trading relatively flat. Okay, so especially in the last month or so, it's just continued gone down. And right now, it is trading at $15.10. I want to show you what this trade looks like if you were to open up a spread trade. Now, what I do want to first mention is that two things. Number one, you have to have an option 3 account with whatever brokerage you're using. So if you only have level 1 or level 2, that may not be sufficient, just depending on your brokerage. So, just make sure you have the right option account. And the second thing is there's not any kind of financial advice. It's just simply a strategy that I think could work pretty well. Okay, so taking a look at Bed Bath and Beyond right now, if I were to open up a trade expiring next week, I would first go ahead and sell a call option. Okay, so I'll sell a call option one strike above the current share price. I will buy a call option above that, and I will buy a call option below that. Now, if you go to custom, I'm going to go ahead and set that custom ratio to selling 2 options of that same option. Okay, so I'm just going to simply change my sell option to 2. And now, as you can see, I set up my trade to where if Bed Bath and Beyond goes up about 0.65%, then I'm going to make $42 off of a max loss of $8. Okay, so this also allows me some profit if the stock moves up all the way to 3%, 3.38%, and it gives me some room if it goes down about 2%. So the only thing that needs to happen is before by January 21, if Bed Bath and Beyond doesn't move below -2%, and it doesn't increase on more than 3%, I'm making $42 on a max loss of $8. Okay, so if it does move beyond those points, I lose $8. And if I open up 10 contracts, I would be potentially making $420 while only risking $80. Okay, so the risk reward is pretty high in my opinion. So this is one trade that I would definitely consider doing. Now, if you want to reduce the risk a little bit, give yourself some more room to make a profit, you can also do something called Iron Condor. So Iron Condor is where you simply first open up a put credit spread. So you buy a put and you sell a put above that strike price, and then you're going to go to the call side of things, and then you're going to go above the share price of the and then you're simply going to just buy a call and then sell a call underneath that. Okay, so what that does is allows you more room. So now if Bed Bath & Beyond moves between -5% and 3%, you're going to make a profit. Your margin is going to cut down a little bit. So your max profit is $37, but there's more room, okay, for you to maximize your profit. If it moves between the 0.65% and -2 and 2.6%, you're going to make $37. If it moves beyond -5% and 3%, then you're going to lose $13. Okay, so the risk reward is a little different, but there's more opportunity for you to make a profit. Okay, so I'm going to do this exact same trade with another company that you probably have heard of. It is Amazon. Okay, so stock ticker AMZN. Just taking a quick look, at Amazon stock. So Amazon stock has actually been trading relatively flat just in the last year. If you take a look at the 1-year chart, it's been going, up a little bit, but then mostly sideways for most part. So After 1 year, it's only been up about 3%. So we're gonna try this trade with Amazon, and I'm gonna go ahead and start out by setting my expiration date to January 21. So it's next week. We're gonna sell a call immediately above the current share price. Okay, so right now the share price is at $3,221. I'm gonna sell a call above that, and I'm gonna buy a call immediately above that, and I'm gonna buy another call right below that. And now I'm going to customize my trade, and I'm just going to change my call side of things. Okay, so I'm going to change my call side of things to sell two of the exact same calls. So now, as you can see, my max profit is $693. And you're going to see how this graph shows that, pretty much I'm going to profit no matter what. Now, the reason why this is set up like that is because you're probably not going to be able to fill this trade without having to adjust a little bit. So you're gonna have to play around with it. Yes, there at some point you're gonna have, whenever you do fill this trade, you're gonna have to be able to endure some potential losses. But this trade basically gives you a max profit of $700. I don't know the max loss what you will fill at, but you can try this with different stocks and kind of see how you can get filled at different strike prices. I'm going to show you that it's actually the same trade with the Iron Condor. So we're going to start by selling a put credit spread. Okay, so we're going to buy a put, and we're going to sell a put at a higher strike price. And then we're going to go into the call side of things, and we're going to buy a call and sell a call underneath that. Okay, so as you can see, there's a little more room for profit, but it pretty much looks very, very similar to the butterfly spread that I set up earlier. Okay, so try this out for yourself on a live trading day. Let me know in the comments below if you have any questions. Let me know what trades that you have that would make a lot of money. I'm always happy to hear your trades. If you like this kind of content, make sure you smash that like button for the YouTube algorithm. I would really, really appreciate it. Subscribe below if you haven't already. Comment below if you have any questions. And until next time, guys, I'll see you around in the next video.